question, can reinforcement learning algorithms produce favorable results and profits for high-frequency traders? Now, you may not know what reinforcement learning means or high-frequency traders, but I will explain and elaborate everything in my presentation. So sit back, get relaxed, enjoy the show. So, how many of you know what the financial market is? Financial marketplace trading stocks. Well, I can explain the financial markets to you all. So basically, stocks are basically a digitized version of bartering, trading and bartering. Let's say you own 2% of a company. You invest 2% of your, that means you invest 2% of your money in the company, so the company will have money to invest in better goods, better services, and that in turn drives the value of the company up. Now, since the value of the company goes up, the value of the 2% that you own go up, which means now you have more capital, even though you invested in this 2% of the same company and you really just, all you did was hold the stock. There's three options that any stockbroker can do. They can buy, they can hold, or they can short a stock. Buying a stock is basically just purchasing it and hoping to sell it at a higher price. Selling a stock is selling the stock high, hoping to buy it at a lower price, thus gaining a profit. And holding a stock means doing nothing and hopefully the stock will go to a higher price, but that's arbitrary and by chance. Now, this diagram helps explain what I just elaborated on. A user gets a piece of the pie, which is a piece of a company, and they can turn a little bit of investment into a substantial amount of capital given the right choices and the right analysis. Now, there are certain currencies that are traded. There's cryptocurrencies that are traded. And cryptocurrency is basically a form of exchanging money, so the government doesn't centralize and really control that exchange of money, which the goal of these cryptocurrencies are to provide funds in which they are more secure than traditional money funding ways. And basically another asset to invest in are index funds or short-term funds, which you can see here, which you grab part of one company, grab part of another company, put it all into one stock, and that's to help minimize the risk. Now some of you may be wondering, is there a way to invest? Is there an efficient way to invest, and is there a way to automate this type of investing? The answer is yes. It's called algorithmic trading. So it basically uses code given Python, R, C#, C. It uses some coding language and it codes algorithms to perform trades, which are buys, sells, and it looks at the stock prices, it looks at the previous prices, and there are certain techniques that are used in algorithmic trading, and I will explain some of them. Now everybody thinks algorithmic trading is all good, and it's the magic problem to solve trading, since a computer must be more accurate than a human, right? Well, there's some certain repercussions. For example, 80% of, according to a study by Forbes, 80% of trades are done by algorithms these days. And what these algorithms do is they buy a lot of the stock and they drastically change the price of a stock. And this is basically what's done in hedge funds today, which are basically portfolio management companies. And also, a lot of these algorithms use up a ton of server space to make its decisions, especially from billion-dollar hedge funds. And this could really pose an issue for people in smaller businesses or people who are trying to just open up the index funds, open up their 401k, trying to prepare for retirement, people say this could provide an unfair advantage and it can really corrupt the market. So is there a better way? That's what I'm trying to answer in this podcast. So I found this way, I found this method called reinforcement learning, and reinforcement learning is a technique, basically a technique in which a machine learns a policy or a function based on what environment it's given and based on what action the agent gives. So the agent right now in trading is basically the algorithm decision maker. The environment is the realm of all stocks that the algorithm is available for. Sometimes it can be very limited amount of stocks, sometimes it can be global. And basically what happens is the agent performs an action which affects the environment, which changes the state of this diagram, and the environment gives the agent a reward, which changes the state. And what we want to do is create a policy to maximize this reward, and this is usually done in numerical configurations. Now, onto a couple of terms before I really want to elaborate on reinforcement learning. I feel like maximum drawdown is a very, very important term in regards to trying to understand the studies. So I'm going to briefly explain what it is. Basically what it is it's the difference between the highest stock price and the lowest stock price in a particular time period, which is basically peak, which is the highest price, minus trough, which is the lowest price. And there's a genetic algorithm. Oops, sorry. A genetic algorithm basically just uses the architecture of the evolution and the Charles Darwin studies basically to mutate and change the algorithm with some logic and random exploration in order to try to produce a desired outcome. Now, neural networks are also utilized, and reinforcement learning is very, very hardly based on neural networks, and they use neural networks. So neural networks are basically networks that learn a specific policy given stock prices, and it tries to maximize the accuracy of a particular data set or a particular problem, so it can predict the accuracy later, thus be able to maximize the profits. Oh well, that's in theory. Now, there is this technique in reinforcement learning called the Ensemble Identical Independent Evaluators, and this was in the paper by Tsinghua University in China in 2011. Basically, it helps solve the complexity problem. Like before, I said some servers can take up a lot of space, can take up a lot of time. This helps solve it because instead of one big neural network which can exponentially grow, these networks linearly grow and can produce the same result. Thus saving a lot of space and a time. And that's one of the reinforcement learning techniques that are trying to be tested in this study. Now, gradient descent is it's basically a topic regarding neural networks, and what it does is it tries to minimize the error between the desired outcome and the actual outcome, and it does this by every iteration, one step is performed more towards the minimization until it reaches a minimal point, which you can maximize the profits. Now, I want to discuss 3 experiments that were run by Tsinghua University of China and 2 by University College of London. So the first one was reinforcement learning versus genetic programming, which is basically trying to compare the state reward policy of reinforcement learning versus the genetic programming algorithm based on evolution. And what you can see here is the study measured a monthly average, weekly average, and a daily average over a period of time, a period of 4 months. Now, this orange line here is what would happen if you just held particular stocks and did nothing. And research has shown that the reinforcement learning algorithms have outperformed the genetic, the buy and hold strategy in all three sectors, the daily, weekly, and monthly, which is able to provide some substantial evidence that reinforcement learning is somewhat effective in algorithmic decision making. Now, genetic programming, although it didn't pass the buy and hold strategy in the daily average, it surpassed the monthly average and the weekly average, and it also surpassed the reinforcement learning policy as well. Now, as for the second experiment, a bunch of researchers performed reinforcement learning in the futures market, which is basically the trading of currencies, which basically means that if something inflates in price, that means the currency value increases, which means you can book a profit. Now versus just holding the currency, researchers tried reinforcement learning methods on the euro, the US dollar, the Japanese yen, and the Mexican peso. And what they found out was that the reinforcement learning techniques had a 0.00839% better return rate than just buying and holding the currency's future strategy, which isn't much, and I don't think it's significant enough to warrant a guarantee that these techniques really helped. Now, on to experiment 3. What happened was a bunch of researchers from Tsinghua University of China used the ensemble of identical independent evaluators in the cryptocurrency market. And what really happened, the results were dramatic, per se. So the orange line here indicates the best stock performance out of all the stocks that were in the experiment. And the blue line represents the percentage returns the ensemble of identical independent evaluators provided. Now, the best stock returned 3 to 5 times the original value, while the ensemble of independent evaluators returned as much as 47 times the original profit value, which is very significant. So the conclusion I want to come up with this, you might be convinced that reinforcement learning is the future, but we have to account for a bunch of caveats. First of all, there might not have been enough data tested. For each of these experiments, 4 years of data were tested at the maximum. If researchers really want to find an efficient way, they should test the data from the beginning when the stock market prices started to be collected and the data was available online. This is including the 2008 recession, which would really be a heavy testing point. And finally, reinforcement learning still uses some server space, which is not entirely desirable, but there are trade-offs. But the ensemble identical independent evaluators weren't proven for many other markets besides cryptocurrency, so we have to diversify the tests to all types of investments in order to get a more viable conclusion. Now, if any of you guys have questions now, I'm more than happy to take them. Otherwise, thank you for listening.